Hey everybody, welcome to 12-Minute Trading. Today is our live market update. Today's Monday, the 20th of November, and we have yet another green candle that we're fermenting out there in the equity markets. So with me here is Dave Lukas at 12-Minute Trading. My name's Doc Severson, and we will be taking your questions here. Now today we got to run kind of a short session. We got a late start because yours truly had a dentist appointment, so we had to push things out for an hour. And now we got a market which is on the run. So I've got to close a couple of trades, some profitably, some got run over. It's okay, but all net positive. So we're going to have to run about 15 minutes early here. So we got about 14 minutes or so to spend with you guys. If you have any questions, if you're just joining us here live, go ahead and get those questions fired in, so we can make sure that we address it. Otherwise, we got a few things to look at, such as the market. So Dave, there was an event that happened earlier today, which is called an auction. Can you help people understand what that was all about?
Well, that's what kicked things off today. So if we've had we've had one real red candle about 5 or 6 days ago in this rally that just seems to never end. I think we had one other little one where the S&P was down like two points for the day, but the one red candle where it sold off like 30 points was because the auction on bonds, the U.S. bonds, was one of the worst ever. And I think it was for the 30-year bond. And the issue is that there are the dealers, quote unquote, the banks that sell those bonds. And so if there aren't enough buyers, those dealers have to effectively buy those bonds and keep those bonds. And so that's what happened a week or so ago, is that the dealers had to take on the bulk of those buying purchases because nobody wanted to buy them, which makes sense, right? You're 34 trillion in debt. You're only, offering rates at 4.5% to 5%. So if you're going to lock your money up for 30 years, is that really what you want to get for it, right? And so you're starting to see that happen more with these auctions, where not as many foreign buyers are buying because the rates aren't as good. And so what'll happen over time is rates will probably move up in the long end of the curve, unless we get some real fear and some thing that comes in, like market crash type event or something. Then everybody flight to safety, and then those rates will come down. But for now, we had the 20-year auction today, and people were watching very, very closely to see if we had the type of issue that we had before, where the dealers had to take on a bulk of those bonds, and they only had to take on 10% today. So that's when that came out and that news hit the tape, it was like right on that second is when this market took off today. And we're reaching, about a 1% move, a little bit more on the NASDAQ. Probably some of that's front loading NVDA into tomorrow. But in Thanksgiving weeks, typically they're positive. Typically about a 1% move is what we see. So we're right there. This may be it. This may be just the move, and then the rest of the week we drift. Maybe, it could even sell off a little bit, off of NVDA, taking some profits off the table and stuff. That's a landmine they put in front of us here for this Thanksgiving week. So that's where we're at. We'll have to just continue watching, see what we're doing, and adjusting accordingly as this thing continues to crank higher.
Now, something I want to bring up to those of you that are watching here. So whether you're watching on live or whether you're watching on a replay, it doesn't matter. This is not time sensitive, but when we started to come off the bottom, so you and I were talking probably 3 weeks ago after this nasty, candle here, and we were coming up with all kinds of reasons why we thought support should probably come in about that time. And we were expecting to see a little bit of a battle at the 200-day moving average. That never happened. We were expecting to see some battles at some fib retracements and round number overhead resistance. Those never happened. This thing just kept smashing through day by day. Now, when markets go from range expansion, they go to range contraction, and then they go back and forth again. Range expansion, range contraction. So when we trend like this, there's 3 ways that the market will recharge itself in contraction. It will go either sideways, or it will go down from whence it came, or usually what happens is it's somewhere in between like this. It's usually a downward reaction. This is what a bull flag typically is. But what I want you to notice for everybody out there is that the third possibility is the price keeps on going. Normally it's very slow. This has just been every single day. There is
Blistering.
the bid is being lifted, the floor is being lifted every single day. So what's going on is up to this point, retail traders have not been buying this rally. Retail traders are like, whoa, no, this is going to fail. I'll let somebody else do that. So retail traders are not on board with this rally. What's also happening is the institutional guys are, they've only got 5 weeks left to make their numbers for the year. They've got 5 weeks left. That's it.
Mm-hmm.
And they're behind the curve because the last 3 months we've been in this corrective move that's just chopped everybody up to hamburger. So they're behind the curve. They're not making their numbers for the year. They're way behind the S&P. So they're looking at their bonuses just like vaporizing. So what they're having to do is to hold their nose and jump on board. And this is partly what we're seeing with this sort of this rising bid, which is happening here. So we don't see this very often. It's only in supermarkets. The other thing that markets are always trying to give you a clue. Markets are always trying to give you a clue. And so something else that I've noticed here is that notice what's happening with the price going down. It's kind of choppy. It did get kind of fast at the very end, but notice that it's going higher faster than it went down. So you always hear the phrase, markets take the stairs up and the window down. Well, now it's the opposite. We're taking the window up. We're taking the elevator up and the stairs down.
We've erased 3 months of downturn in literally like 14
in 3 weeks.
Yeah,
3 months to the downside has been erased in 3 weeks. So
that is, I don't remember a time of seeing something like that. And, and again, I think I said it last week, this market will continue going up until it doesn't. Like that's the thing. And so the conventional wisdom says, hey, this market should be tired. We should get a pullback. It should rest. It should, put in a higher low, right? And a lot of times markets like this will, and we've seen things like this before, not even to this extent, though. I think I pointed out for my students the other day, in 2021, we had a rally like this in November into early December that ultimately led to the highs of the year right before the rug was pulled and we had the next, we went into the bear. That took 10 weeks to go up, and it was up about 10, 11% in the end. And we've hit that in 3. So this is, to me, it is shaping up to kind of follow that same trend where you run through the end of November, the first couple weeks of December get soft, and then you get your rally into the end of the year. So I think we still got some more room to go. I think the NASDAQ's there. It's hit 16,000. It's on the NDX. We've got new highs for the year. The SPX is going to tag 4,600. Probably not. Maybe it will tomorrow. Maybe it will on Wednesday after NVDA. But I think it's going to tag it, and then that's where we're going to start to see some softness come in at those levels. They're just key levels for that. But if there's going to be any pullback, otherwise it's going to keep going, and it'll keep going till that daily energies or that weekly energy is really out. Now we're not that far from it, at least on the 9-day time frame, but on the 14-day time frame, it's still got plenty of juice left.
Yeah. Also watch the Russell. The Russell, technically should be exhausted, but notice what's happened to the weekly energy. The weekly energy is huge, and the monthly energy is off the chart. So the parent time frames are going to drive things. So for those that are just, focused on the daily chart, they may lose the bigger picture here. Watch what happens to the 200-day moving average with the Russell. If it gets eviscerated, if it gets smoked, then what you've got is all hands on deck. Right now, we have not had all hands on deck. We've had mostly, some big tech. We've had some industrials. We had energy earlier this year doing things, but we've not had the benefit of small caps at all through most of 2023. And now if small caps get on board, then look out, because we could get into the melt up.
The Russell's not participating today like the rest are. It seems like it is a little bit tired. And that just could be the short term. Actually, I did a trade on the Russell today because I think that we are I think there's a good chance it goes higher, but I just don't. I just think it's going to have to take its time to do that. That's usually how the Russell goes. Once it starts to rebound, it'll have that jump and then kind of grind from there. But like even on that trade, I was able to get 10+% out just a few weeks out. So that's kind of where we're at. Like this is a time where like it can, for if you're like a call seller like I do a lot and stuff, those call spreads can look pretty ugly. Well, the move like this, even if they're not close or in the money, obviously a move this fast, in this much time can make them look pretty ugly from a P&L standpoint. But if you're able to keep your head about you and just manage things, and just stay ahead of it, when it turns, it all goes back the opposite way, and your P&L goes where it's going to go, but it becomes really, really awesome because of the opportunities you get to come in on that backside and sell those put sides again, right? You sell put sides, let it run away, buy your put side back, move your call side, and then just let it fall again. You resell it, sell your call side. You can play the swings really, really well in a market like this. So that's something to think about too for yourself.
The thing I've been so excited about lately is, and I remember when I talked to you, it was about a year and a half ago that we started up the Target 100 service. And I said, Dave, what you see today is not what you're going to see a year from now. And it's not, because the market changes all the time. And so it's kind of our job to match what the market's doing. We're never going to say, hey, the market should do this. We're always going to lose that argument. So we have been changing things. And the thing I'm excited about lately is with this low volatility. So we're back down into kind of this sort of low
12, 13.
Low funk of volatility. And it's just, it's tough to find things to sell far enough away. And it's, you can be literally in trouble in a day in today's market. Right. So I've known, like the answer to that is using time spreads, because time spreads, if you use them right, is a great low volatility solution. But quite honestly, I've not been able to find the correct solution to apply to this, to make it something easy that people follow along with and trade until recently. So finally, with this campaign thing that we're doing is, wow, it's just so simple. So we did another roll today. Quite honestly, the market, you've got the two sides that are hedging each other. So I don't care about big moves either way. Right. All we need is probably a week of sideways motion where we're not destroying the value of that long put option. And we're going to be another 20%. So every single one of these, we've taken off at about 20%, unless there's been some like big event or something. Like a lot of times we'll try to get out before the Fed, just to avoid that thing. And then we'll go right back into it the next day. But I don't recall ever trading a strategy where I cared so little at night about what was happening, like not checking the futures, not like freaking out and wondering what's happening. It's so liberating. So if you guys want any kind of details on that, please let me know. Please reach out to us, support at 12minutetrading.com. I'd be happy to fill you in. This is something I've been looking for my entire trading career, and it's just fell into my lap like 6 months ago, where I just put two and two together. So very happy about that. So yeah, it's actually, it's been a hell of a year, considering all the volatility and everything that we've had. It's actually been a very profitable year.
Yeah, it has been. It's been really, really fun to kind of watch this. And I've been telling my students, even going into this time, like, look, lessening position size, that sort of thing. We've had a great year, and there's no reason to, throw it away into a move like what we're seeing here and stuff. And so, got some things we're managing through this, but it's been nice, and it's going to end up being a really nice year all around, right? Yeah. So, I think that's the best. The best thing is understanding this seasonality stuff, the way markets move is looking back on it, it's amazing how it does kind of follow a pattern, right? Typically it's rough in the first couple months of the year, then it gets easier in the spring. You get a run in the summer, usually July into August. It sells off in September, and then you get sometimes like a low in October, and then you get your massive rally into November, early December. You sell off some, and then you get the rally into the end of the year, and then it all begins over again. So just keep that in your mind, because it's amazing how, if you kind of plan for that, how it actually it can work out fairly well most years. So
Yeah, especially coming off of a bear market like we did last year.
yeah,
We should expect to see. So even though there was some doubt going into October as to like, are we shifting into the next bear or not? This is why we play both sides of the market. We're never so committed to one side or the other that we can't be flexible to bend with the market. With that, I apologize because I've got to move along and shut things down here today. So if you guys have any questions, and please let us know. Shoot us an email, and we'll bring it up on the next session that we're going to do. So I think we're going to be here. Yeah, we'll be here next Monday. So
we'll be here next Monday.
Yeah. So until then, thanks everybody for joining us, whether or not you're live or whether you're watching this on a replay. And 12-minute trading. So from Dave, Lukas, and myself.
Have a wonderful Thanksgiving, and
great Thanksgiving.
Go Buckeyes beat Michigan.
Yeah, there we go. All right. Thanks, everybody. Adios.